and gentlemen, good afternoon, and welcome to our panel, the banking panel. Over the next 40 minutes or so, we'll have the opportunity to delve into some of the most interesting topics in relation to the future of Greek banking. As Christos said in his lunch address, Greek banking has been through an amazing transformation journey over the last years. A transformation journey that has been driven from multiple forces, regulatory forces, technological advancement, and shifting customer expectations. In this dynamic period, the Greek banks have performed really well. In the last quarter of 2024, all Greek banks reported very strong results, which is a great testament of their strategic agility in this dynamic environment. Looking ahead, there are questions from investors ranging from how the Greek banks will deploy, what is the prioritization of internal capital generated, what are the priorities of the Greek banks in relation to the capital that they have built over the last couple of years, what will be their strategic priorities in an environment of decreasing interest rates, which will be affecting the net interest margin, and a few others. Those we will have the ability to discuss today with our distinguished panelists, whom I'm going to introduce to you shortly. On my left, we have Lazaros Papagaryfallou, Deputy CEO of Alpha Bank. Next to him, Konstantinos Vassiliou, Deputy CEO of Eurobank and Head of Corporate and Investment Banking. On his left, Christos Christodoulou, Executive General Manager and Group CFO of National Bank of Greece. And next to him, Theodore Tzouros, Executive General Manager and Head of Corporate and Investment Banking in Piraeus Group. So we will follow, to make it a bit easier, the order of introductions. And Lazaros, probably will start with you in the elephant in the room that has to do with the dropping interest rate environment. ECB has started to reduce its main refinancing rate, and we know that this trend that we expect to follow for the next months would affect the profitability of the banks. There are a number of levers that one can tap on in this environment, from growing the balances, doing new things, getting more in fee and commission business, expanding, and many others. How is Alpha Bank planning to grow in this environment in the future?
Good afternoon to everyone. A big thank you to Capital Link, the Capital Link team, Nicholas and Olga, for making this happen and the invitation. Coming to your question on rates, indeed, falling rates are a headwind for most European banks, and you will appreciate that we have done our homework to manage the outlook for revenues within this context. When it comes to Alpha Bank, this has been reflected in dynamic balance sheet management, starting with fixed rate assets, including securities, that we have added in the last couple of years as rates were going higher. We have also added derivative hedging in order to make sure that the ratio of fixed rate assets to core deposits stand at a level which will protect our net interest income when rates start to go lower. And indeed, we have reached a level of approximately 85%, which make us feel comfortable about the pace of things to happen. On top, when it comes to Alpha, our lower dependency on the mass market segment, and lower level of non-interest-bearing deposits means that we have a lower sensitivity, I think the lowest in the system. Still, it is a headwind, as with all other banks. As a sector, we do have a counterbalancing element to help us sustain and grow the top line. That is loan growth and a growth in our fee business. Coming to loans, we have seen a high single-digit growth in the corporate segment, and it is a profitable growth as risk-adjusted returns on capital stay above 15% level. And it also adds tenor to our books, since we are mostly speaking about investment loans rather than working capital facilities. In retail, there has been a less pronounced growth. We gradually start to see some life in consumer and small business lending. And when it comes to mortgage lending, the government-sponsored programs for subsidized loans have been coupled by similar efforts from the banks, which have helped us grow our balances in the last couple of years. Still, volumes are not that significant. There is more work to be done, and we are focusing on making sure that we can meet both demand as well as the supply, because there is a supply issue when it comes to residential assets in Greece. Then, on the second pillar, which is fee business, we do have significant opportunities, and we also see structural reasons that drive fees higher, including increasing more benign macro conditions, increasing disposable income, less reliance on state pensions and the health system, digitization, financial literacy. All these are drivers which can grow our wealth management business and help us deliver more AUM growth and fee growth in a period when it's most needed. Similarly, in areas where we can draw advantages from partnerships, we are pursuing such collaborations like the one we have recently agreed with UniCredit, centering on wealth management and other areas in order to make us more competitive, not just in Greece, but outside the borders. And that kind of shows the way forward is to grow using those drivers which are prevailing in Greece and are very close to our DNA, mainly corporate and wealth management. And wherever we feel that we can add value from partnerships, we do so, taking advantage of the ecosystem which is around us.
Thank you, Lazaros. And Konstantinos, turning to you, Eurobank is the bank in Greece that has the most wide geographical presence out of Greece. You announced recently the acquisition of Hellenic Bank in Cyprus. So my question in this environment and interest rate pressures is, should we expect the bank to focus on leveraging this existing presence after the recent acquisition, or you believe there is more space for inorganic transactions in the short future?
Thank you, George, and really nice to be here for another year, and thank you for the invitation. Thank you for your attendance. We will, of course, indeed leverage on this acquisition, and actually what I believe it differentiates us a bit from the other Greek systemic banks. It is our international presence. So I heard carefully what Lazaros said, and actually I echo every single word that he mentioned. But I will give you one example. Based on our budget, the reduction on the interest rates that we expect and the related NII, it will be fully neutralized in our occasion just by consolidating Hellenic Bank. Now, what do you expect from us? From us, it was always vital to be a bank with an international focus. Sometimes also, if you see also the brand of the bank, it's not accidentally that it's called the Eurobank. When this bank has been established, it was a Euro merchant bank 35 years ago, because this bank was always looking in Greece, but also outside Greece. So the ambitions are going also outside Greece. Also back in 2015, because nothing is accidental, when it was the largest capitalization of the Greek banks, thankfully for us, but also for Alpha Bank, back then with the support for us by Fairfax Financial Holdings, we managed to recapitalize the banks solely by private capital, which allowed us to retain our presence outside Greece, as opposed to the other bank, which unfortunately, it was not their fault. according to the European Commission rules, had to sell their international subsidiaries. Our focus, it is, as it is in Greece, is outside Greece as well. 45% of our balance sheet and 45% of our core operating profit will be outside Greece. Now, regarding Hellenic, I don't know if we all realized, but actually it's the first cross-border acquisition that took place in Europe. And actually, this is not for something to celebrate for Eurobank. This is something that is unfortunate for Europe itself. We have to see more consolidation in Europe and not a Greek bank acquiring a Cypriot bank. We have to see more consolidation in Europe if we would like, and if we would like as a continent to compete with other banks on a global scale. So let's see the landscaping for us. First of all, part of the strategy is that in every single country that we will operate, we need to have a significant size. It's impossible to be profitable in any market these days if you're not going to have size. Why? Because the regulatory environment is as such, and the needs that you have to invest in issues of compliance, in IT systems, in order to service your clients appropriately, if you don't have size. So we don't intend to go in any market to start a greenfield or a small operation. Now, Cyprus, following the acquisition of Hellenic Bank, we're going to have 42% market share there. So Cyprus, there's no more room for consolidation. What is also important for you to know is that through Hellenic, we acquired also CNP. CNP is the largest insurance company in Cyprus. We're going to have 32% market share, and this is really important because bank assurance, and as Lazaros mentioned, the fee generation income is really important. So we're bringing the factory, which is the insurance company, within the bank. So Cyprus, there is no further room for consolidation, both on the banking side and the insurance side. Greece, you know, I think that it's not the government's priority at this stage to allow further consolidation. To the opposite, they would like to encourage more banks being there. So even if we could see an opportunity there, I don't think that there is a room to discuss something like that. Bulgaria, where we own the fourth largest bank there, the four largest banks, which is Unicredit, KBC, OTP, and Eurobank. We have a market share of 75%, so there we see room for further consolidation. So if there's an opportunity in Bulgaria, we will definitely raise our hands. Outside these areas, as I said, we don't see any opportunities because the landscaping in most of the countries pretty much is there, and there are not many independent banks, and for us it's very important to have size. We see, though, more inorganic growth in areas which are core for the banks. It's not as banks, such as insurance companies in the countries that we operate, but also asset managers, either in the countries that we operate or outside Greece. The other thing is that in some areas, we'd like to expand our operations through rep offices. I will give you one example. A good example is India, that we're opening a rep office in Mumbai. Why we're doing that? Obviously, we don't have ambitions. We're realistic. We're not looking to conquer India. However, we see that India is becoming a global player. There is, I don't know how familiar we are with the IMEC route. There's going to be a lot of capital and human and products flow from India towards Europe. India is looking for a getaway to Europe. I hope that Greece will take advantage on that, primarily in the port area, because actually Greece and Italy are competing who is going to be the key port that India would utilize for Europe. What is our ambition there is to utilize primarily Cyprus to be the getaway for companies that would like to have an entrance in Europe. Why Cyprus? Because it's a Commonwealth country, they have a tax system which is very suitable for them. It's closer to India. So also we are very close, and I think the decision has been made to open a rep office in Abu Dhabi, in the UAE region. And last but not least, we're looking for partnerships outside Greece, because it's not such thing that only acquiring someone. For example, Lazaros mentioned the strategic relationship, but also Unicredit, it's one step ahead because they have a stake in Alpha Bank as well. For example, recently, we signed a strategic relation with Eurizon. Eurizon is the largest asset manager across Europe. with 1.3 trillion euros, is a subsidiary of Intesa Bank, and we signed a strategic relationship for asset management services in all the areas that we operate, and actually we can disclose that we managed to have exactly the same fee agreement that they have with Intesa itself. And that's what defines a strategic relation, because they treat the relationship like being a close group bank. So I stop here. So very clearly, we're looking for more organic and inorganic growth outside Greece. For us, international expansion is key to our model, and I truly hope that this could be the case for the other Greek banks. We're competing fiercely in Greece. Let's not compete in a bad way outside Greece. It will be really nice to have more Greek banks having stronger operations outside Greece as well.
Thank you, Costa. And Christos, turning to you, for the first 9 months of the year, NBG reported also very strong profitability with $1 billion of profit after tax. Again, in the same spirit of this declining interest rate market, do you believe that this level of profitability is sustainable for the bank? And what are the main actions, if you will, that you take as NBG to preserve, if possible, this level of profitability?
Thank you, George. Let me also thank Nikos and Olga for the invitation in this wonderful event. Pleasure to be here, like always. Lots of the things that I was thinking to say have been covered by colleagues, so I'd like to improvise a bit.
The second round would be opposite for
tire the audience, okay. So indeed, on the back of sustained growth of the Greek economy, the strengths of our balance sheet, and our ongoing transformation, we were empowered for a strong performance for the 9 months. We managed to deliver a profit of nearly $1 billion, as you said, and a return on tangible equity of 17.5%. So that's quite a strong performance compared to what we had to do in the past to get these kind of numbers. Now, obviously, the key driver for this performance is NII. And despite the fact that we've started to experience a decrease of the market rates, we still managed for the 9 months to deliver a 9% growth year on year on NII. Nevertheless, comparing by the end of September the 3-month Euribor to the peak of Q4 23, that's already 40 basis points down. And we all know that ECB in October already reduced rates by 25 basis points. And let's see what happens. On Thursday, we are 25 or maybe 50 basis points of additional decrease is expected. So inevitably, NII is going to suffer a bit, especially in 25, if the path of the lowering rates is what we expect it to be. Now, as Lazaros said, we have not been sleeping. We've been proactive to try and make all the necessary actions to the extent possible to reduce our sensitivity to lowering rates over the last few quarters. So effectively, there are a few actions that we've taken. First of all, it's hedging. We've tried to hedge the floating elements of our balance sheet. We've tried to do structural hedges on non-maturing deposits when the rates and the forward rates were favorable, and we at NBG used about 10 billion of our deposit base to set those hedgings. As well, we have lowered hedges that we had placed when the rates were negative in our fixed rate assets, debt securities. So with that, by turning them effectively from floating to fixed, we are also trying to improve the sensitivity of our NIM and NII to lowering rates. Now, at the same time, we started building more debt securities in our balance sheet, about 2 billion year on year, which again contributes to a more sustainable level of NII. And I think one important factor as well that will support NII going forward, and our ambition is to bring NII by 26, 27, depending on the path of lowering rates to the levels, the record levels of 2023, is credit growth. We started the year, I think, modestly, saying that we expected a similar growth in our loan book as we had in 2023. We revised that guidance mid through the year to a level of $1.5 billion. Now we've seen us achieving that target already by beginning of October. So our expected growth is going to be over $2 billion for 2024. Similar growth is expected for the years to come, and that's not based on numbers. It's based on the pipeline that we see, our relationship with our customers and their projects that are coming up. So we do feel pretty confident about the growth prospects of our loan book. One of my colleagues mentioned retail. The retail segment used to be a drag to our growth over the many past years. 24 is the first year that this will not happen. We've seen retail grow, especially in the segments of SBs and consumer. The mortgages now are also picking up. We have been discussing the lack of supply in the market in terms of houses, but this is also reverting. So given that retail is going to be a contributor to growth of our loan books in the future, it adds another lever for us sustaining the levels of profitability that we achieved this year and the year before. Profit is not only about NII. In our case, we place great focus in diversifying our sources of income, and I'm referring to fees. Not credit-related fees, I'm referring to non-credit-related fees. So we intensified our actions and our initiatives to improve in investment products. We've managed to double our assets under management over a period of 9 months. So our actions are materializing, and we want to do more of this in the future. Bancassurance is also an area where we seek to improve. And one area that MBG, given its big clientele, could also add to the tally of the fees that we achieve on a yearly basis is cross-selling. We haven't been doing a great job in the past. We want to improve our service to our clients, so that's an opportunity as well. Now, moving down the profitability line, on the cost basis, costs are not coming down, obviously. If you want to make money, you need to spend money. Now, having said that, we can try and optimize the OpEx base and try to be a bit more efficient than we could have been. We've been spending a lot of money on technology in NBG for the past 5 years. We try to leverage that technology to minimize costs that we spend over every year to generate our business. So that's a lever as well. And lastly, I would like also to make a point about our provision charges, our cost of risk. We are very happy with the way things are unfolding with regards to asset quality and the lack, thankfully, of net new flows of NPEs. So that empowers the bank, not just MBG, I think all the banks, to normalize their cost of risks. So that's another support for the bottom line profitability. I think adding all these elements together will empower us, Georgios, to manage our profitability levels going forward, and we are very confident about retaining the high level of earnings we had in 23 and by the likes of it also in 24.
Thank you, Christos. And going now to Theodoros for the end of the first round. I hope the second will be a bit faster, otherwise we'll not be able to complete even the second. But Theodore, my question is, one of the levers that we discussed is credit expansion when the margin goes down. And one of the areas of credit expansion could be as well the SME market. Now, there has been, in the recent past, some criticism, if you will, towards the large banks, the systemic banks, on that there is more financing towards large corporates and financing large projects, and SME do not participate in a similar way on this credit expansion. So the question is, what is your view on that, and what action does Piraeus Group take towards SME financing?
Thanks a lot, George, and thanks a lot to Capital Link for the kind invitation today. It seems like the SME is the hot topic of the day. Let me start by saying that 2024 has been a very strong year for Piraeus. In terms of credit expansion, the wholesale book, we have managed to increase the book by more than 2.5 billion by the end of the year. This is a 10% increase, and I think reflects our capacity, but more importantly, our commitment to support the Greek economy. In general, the Greek banking system, during the last 2.5 years, we have provided around 15 billion of new loans in the corporate book. This is a 25% increase. And I think this demonstrates our commitment supporting the growth of the companies and of the Greek economy. And we have to say that we have provided this financing when, despite the investment grade status of the Greek economy, we haven't seen any foreign lenders providing new money to and borrowing the Greek entities. Now, if we want to focus a bit more on the SME segment, I think that this is an area we hear a lot of criticism. In my opinion, this, however, does not reflect the true facts and the reality in the Greek economy. First, I would like to notice, to note that according to Bank of Greece data, out of the 68 billion corporate loans in the Greek economy, 38 billion relate to SME. This corresponds around 55% of the loans, and the remaining is the large corporate. Also, we should note that during the last 2 years, 2023-2024, the Greek banks, they have provided 2.5 billion loans to the SMEs through the programs of the Hellenic Development Bank and the EIF. I'm referring to programs that they provide guarantees to the banks in order to provide loans at very competitive spreads and very good credit terms. So, in my opinion, the SME segment today is well-serviced and is adequately financed. I think that the concept that the new 2 Greek banks in Greece, they are going to bring a new era and will tap this under-serviced segment, fails short of the economic reality. On the other hand, we should note that during the last years, the new loans provided to large corporates amounted to 4.5 billion, when the SME was only 1.5 million. And I think this reflects a reality in the Greek economy, that big investments, either in the energy sector, or in the hospitality, or in the infrastructure, are undertaken by the large corporates. You appreciate that large-scale investments, you need a lot of expertise, experience, in order to develop highly complex projects. As Piraeus, we have a very strong positioning in the SME market, with our outstanding balance currently reaching 6 billion. This is an area that we have a strong regional approach. You have to be very close and talk on a daily basis to your clients. So we have a developed network of branches, business branches across Greece, and we have more than 100 relationship managers talking to our clients every day. Nevertheless, because it's a very big portfolio, we're having more than 8,000 clients on this segment. It's very important to have an automated and systematic approach in your underwriting. For these reasons, during the last year, together with our advisors, we are working on putting artificial intelligence techniques. So we're trying to have a systematic way to identify the next product to buy for each client based on his transaction history, based on his sector, based on the financial performance. We are also spending considerable amount of money and resources to automate the approval process and reduce effectively the time to cash. Concluding on the SME sector, I think that this is a vibrant sector. It's a sector that has been expanding during the last years. And I should also notice that most of the companies in the SME sector, they have shown very strong financial performance. And I think part of their success is due to the Greek banking system that has provided adequate financing at very competitive terms. Thanks.
Thank you, Theodore. And if we could kindly ask for 2 minutes response on the second round so that we can complete it for all 4, because we have like 10 minutes left. The second question, Theodore, will be in relation to energy. And we have seen in the morning session, how interesting are the evolutions in energy, but also how big in terms of investment is this sector. So the question is, how do you see the role of the bank in supporting the energy transition of the country, whether it comes to big investments needed, like in grid, but also investments that corporates and clients of yours need to take to meet targets that they have committed to?
Thanks, George. Look, the Greek
energy transition plan provides for the journey in order to the country to reduce its CO2 footprint by 55% till 2030, and then we aim to achieve net zero by 2050. The sectors identified as the ones that have the higher contribution in terms of CO2, as you know, is the transportation, is energy, electricity production, industrial production, and of course the agri and buildings households. The transition of the economy to the net zero is going to be implemented on a gradual basis, and it's going to realize in three distinct phases that are going to have a gradual effect on the corporates. What do we expect? The first period is till 2030. During this period, we're going to have a rapid shift of the electricity production to the renewables, mainly photovoltaic and wind farms that we have proven and well-efficient technologies. During this period, the next years, we are expecting the development of the network infrastructure, as well as the interconnections with the remaining of the countries, essentially in order to have to accelerate the penetration of renewables. But we also are going to have the smart meterings, which is going to allow the electricity demand to match the electricity supply. Most of the corporates that are going to be affected during this phase are the big energy players, as well as the network operators. Most of them are well prepared, and most of the projects are well advanced. I think the most interesting part for the energy transition is the second phase, which is the period 2030-2040. During this period, we are going to watch the intense electrification of the economy, which is going to be achieved through the decline in the cost of power of storage and more efficient technologies. We're expecting to see the penetration of electricity effectively to the road transportation sector, as well as the heating of the buildings through the heat pumps. This is also the period where we expect the electricity consumption to becoming 70 to 95% from the renewables. In terms of investments, we're expecting many battery projects to be implemented. As we speak, we have the development of the first batteries project. We also have the water pump storage system in Amphilochia, currently developed by Gekterna. It's a landmark project. But we're also expecting the first project in the CO2 capture, which effectively relates to the cement industry and the engineering. I think the most challenging part of this exercise is going to be to educate the lower segment of the market, the SME segment. They also have to prepare their energy efficiency measures. And I think here is the important role of the banking sector. We have to sit down with our corporates, we have to explain them the transition plans, and we have to work on solutions how to go to the next day. Closing, the last part of the transition plan of the country is 2040-2050, and this is the period where we're going to see the development of the green hydrogen, methanol, and ammonia, and this is going to affect the hard-to-abate factors, companies, such as the heavy transportation, shipping, and aviation. What we see in aviation today, and mostly in the shipping we see that most of the companies, they are examining potential technologies. Nevertheless, they're quite hesitant yet to make the final decisions. They are making new builds. They're opting to have flexibility. We have dual fuel engines. Nevertheless, the final decisions are going to be postponed at a later stage.
Thank you, Theodore. And now we go to the test phase to test the great experience of these guys talking to investors. We would like in 90 seconds your reply in a relatively complex question, Christos. Last year we were discussing here with Elizabeth McCall from the board, a board member of ECB, her view on whether Greek banks will finally pay dividend, and finally Greek banks paid after many years dividends. So same question, what is next? What should we expect in terms of dividend payout in the next years?
So the 5-second answer is you should expect dividends and payouts to increase. So that's the path. So milestone year for the banks on the back of strong balance sheets, capital buffers, sustained profitability, as well as the improvement in asset quality. We finally opened the door to payouts to our shareholders. At the end of the day, that's what we do, create value and return that value to shareholders. Now, from this point onwards, shareholders should expect more. In our case, we started with a 30% dividend payout, cash payout last year. We intend to go up to 50 out of 2024 profits. Part of this payout will be in the form of share buybacks. We do acknowledge the value that this will have for our shareholders given our current valuation. So that's the path forward. And I would say that beyond 2025, you should expect gradual increase in our payouts to higher levels. Now, having said that, at least in MBG, there's still ample capital to use. We want to grow our earnings in the medium term, so priority is to find pools and ways to deploy that capital in a value-adding manner. If not, we will increase payouts even more. So that's our plan going forward, and I hope I respected the 90 seconds, George.
Yes, you did, and now you pass the challenge to Konstantinos. Konstantinos, you announced recently the launch of a venture banking unit that follows the model of what we have seen in some foreign banks to strengthen the innovation ecosystem. Could you provide us like a 9 seconds overview of what is this about and what do you expect from this venture banking initiative?
9 or 90?
90 seconds.
Okay, good. Look, I mean, as opposed to the overall rhetoric and what it was heard once again today that the SME sector is underserved in Greece, which is not true. What is true is that the technology ecosystem is totally underserved in Greece, actually, and it is our fault that this ecosystem, we don't have any communication with them. We don't speak the same language. They see us, rightly so, in a certain extent, like dinosaurs. They don't want to talk to us. We speak a different language. So, and actually, why it is our fault? It is our fault because it's a global trend that this ecosystem is an evolving ecosystem in any economy. In Greece, already 5.5% of the country's GDP is valued the startup tech, the startup companies. And actually, we're going to see the average percentage in European countries, approximately 8%. So definitely it's an area that would like to understand better. We're not claiming that we really understand it, an area that we'd like to share because it's going to be a big part of the economy. So the idea is very, very simple. We'd like to focus on this ecosystem on a 360% basis, 360 degrees basis. And the idea is the following. From the origination of the idea until exit, we'd like to play a role. So the origination of the idea, actually, we already established EGG. EGG it means for Enter, Go, Grow, Go, which is the largest accelerator in Greece and one of the largest across Europe. Then, through investing in venture capital funds, because it's an area that we don't know ourselves, to support capital for these companies in order to grow further. As these companies will grow further, to invest in growth capital funds in order to support further these companies, but also at this stage to provide capital as well. Why? Because these companies might not have profitability, but what they really have is a strong assets, which is receivables, with very credit-worthy counterparties, and also the required venture debt for growth. Also, we would like to play a central role in the exit of these companies, because all of these companies will be either exit through selling to strategic investors, and also to our core corporate clients. We would like to create a networking for what we're calling banking as a service, because these companies actually have to offer a lot, both in technology, but primarily to the mindset, in order to modernize the actual traditional corpus of the economy. I could talk a lot about that, but I think already surpassed my 90 seconds. Thank you, George.
Thank you, Konstantinos. And Lazaros, maybe the most challenging now to you, like 90 seconds, to discuss a bit about what do you see the key benefits of the strategic cooperation that you have announced some months ago with UniCredit. What is your take on the benefits for both this, Alpha and UniCredit a few months after the announcement?
So the partnership has various building blocks. It started in Romania, a region we like. We thought it doesn't merit further capital allocation on our side, especially on inorganic options. as the price would be high, and where we trade, it doesn't make sense. So we decided to join forces with UniCredit, merge our operations to create the third largest bank in the country, and benefit from the upside that we feel will come out of a 10% minority shareholding. So that's one. Then we soon identified opportunities in Greece, in areas of common interest, namely wealth management, where we have a pole position as a distributor and manufacturer of products in the country. We have an open architecture model. We distribute the products of third parties, but also our own products. So we are adding UniCredit's products to our product palette, and we're jointly doing marketing efforts to increase penetration. At the same time, we have been entertaining sales of their products in the last few months, reaching already 200 million in just a few months, in the first months of cooperation, as a taste of what can happen. We have agreed to establish a joint venture in bancassurance for unit-linked products, 5149, where UniCredit has a pole position in the Italian market, 40% market share in unit-linked. So we thought that this is an area that we can further pursue opportunities in Greece forcefully to capture more market share. And we are working together in wholesale in areas like transaction banking, trade finance, LCs, LGs, FX, in order to capture flows of our corporate customers. For Alpha, it is a way to offer to our corporate customers and to Alpha a gateway to a European network. UniCredit and BNP have the largest networks in Europe, so we enter into an ecosystem that provides opportunities to our customers. For UniCredit, it is a way to enter another market without cross-border M&A through a strategic alliance that comes with an equity stake and commercial agreements on the ground that can help them create value for the bank and the shareholders, including UniCredit.
So, dear friends, we are now at the thank you part. Thanks to our panelists for helping me to stay close to the slot allocated. And a big thank to all of you for your attention. Thank you very much.